Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with another edition of the weekly economic review, this time for the week ending March 4th, 2022. Before I get started here, just an announcement. I will be off next week. It's going to be spring break here in the beautiful Quebec City. So the next edition will be published on March 18, 2022. So let's look at this week's markets at the close on a Thursday. So, of course, Russia and Ukraine, the conflict is all over the markets. We had some scares this week, so interest rates lower, meaning gains for bonds. So we've been mentioning that over the last few weeks, few months, that yes, we have a headwind for bonds structurally, but you want to have some in your portfolios when volatility really hits. And it was a good example today with a gain of about 2% for the long index. When you look at stocks, the TSX actually had a positive week and it's still up year to date, 0.5%. So of course it has a lot to do with the price of commodities. So price of oil higher, price of metals higher. So that helps the TSX, which is really outperforming in this environment compared to the US, to NASDAQ, EFI, emerging markets, which are all suffering year to date. So Advantage Canada, price of oil up 17.6% on the week, so after 4 days. So that's a pretty strong bounce. Price of gasoline is also rising quickly over the last few days. So this is a tax on growth. So it's going to cause some issues. It's going to cause more inflation also, but we do export a lot of commodities, so it helps producers, so it helps Canadian GDP, and it helps the stock market. So Canada is in a good spot when you have commodity prices that are rising. Price of gold also is higher on the week, starting to see some interesting moves there from gold. So the headlines this week have been all about Russia and Ukraine. So they are talking, they're having difficulties reaching an agreement. And last night, on Thursday night, we had the news reports of the nuclear plant in Ukraine, the biggest in Europe, that was in flames at some point, and finally just been seized by taken by the Russian army. So maybe we avoided a catastrophe here, but it reminds us that wars can be unpredictable, and you can have some slips that could be very costly. So very happy that nothing happened with the power plant yesterday. But when you look now maybe at the economic situation, because that's what we're here for, economy in the markets, Russia is a middle-sized economy. So it's a bit smaller than the Canadian economy, actually. And when you look at the table on the right, on the chart that appears here, you can see that Russia is on the far right. So it's pretty small compared to the US and China, similar size to Canada. All of the sanctions that are hitting Russia right now will probably lead to a very deep economic crisis over there. The spillovers from the Russian economy per se are going to be very muted. But when you look on the left, the importance of Russia on the size of the reserves for natural resources, then Russia is very important. When you look at its reserves of oil, of wheat, of palladium, platinum, so metals, agriculture, that's the biggest country in the world when you look at that. So if you have sanctions that are hitting natural resources, that could cause further inflation or high prices for natural resources, and that could lead to problems to everyone around the world. So now the base case is still that we have a strong economy. We have a lot of dry powder. We have a lot of savings from households coming out of the pandemic. So the economy is very resilient, but we need to raise the odds of a scenario where a global recession hits, because typically, historically, when you've had a rise of over 50% in the price of oil, that's always been followed by a recession, and that's where we are right now. So let's see if it happens or if it's different this time. It's not our base case, but it's something we need to consider, and we'll keep you posted on how our view evolves on that over the next few weeks. Now there's still so much uncertainty in the air. If we look at home, the Bank of Canada, we had the first hike since 2018 on Wednesday. The bank hiked and also raised its inflation forecast because of the reasons that I just mentioned here. And the Bank of Canada is flagging that it's expecting to continue hiking. Probably, likely, this is our expectations, we'll have another hike in April. So mid-April, we could have another hike by the Bank of Canada. After that, will they take a pause or not? It depends on many things, but we still believe that over the next 2 years, it's 8 hikes that we should see. So 1 in the books, 7 more to come. How quickly, how slow? I mean, it's when it's still very much up in the air because of the Ukraine situation and the impact on inflation. But we still think this is the path for the Bank of Canada. Now, looking to the US, finally, the labor market is going full steam ahead. The acceleration in the number of jobs created. If you look at the blue line, as you can see how steep now it has become over the last few months. And since the beginning of the year, it's 1.16 million jobs that have been added in the US. And that means that now we're only 2.1 million below the peak of February 2020. So that's a sharp acceleration here. They're not yet back to the peak, as I just mentioned. Canada is, but Canada in January, we had a loss of jobs because of more stricter restrictions because of Omicron, especially in Quebec and in Ontario. And we'll see, as you can see in the chart, or as you saw, the blue line is a bit longer than the red line because we don't have the figures for February in Canada yet. It's going to be Friday next week, so I'll be discussing that in 2 weeks in the next review. But we are expecting also to see a strong rebound from Canadian stock market. So it's still advantage Canada. Probably on the labor market when we have the February data coming out. So what to watch next week? We'll have the employment report in Canada. We lost 200,000 jobs in January. Let's see what happens in February. And we'll have the CPI in the US should still be accelerating from 7.5 to 7.9. So is that the peak? Where's the peak? It's still hard to tell because of gasoline prices, but we are in a peaking process here in the short term. And we'll have the University of Michigan Confidence Index coming out too. Should remain at very low levels. So that wraps it up for the week. ia.ca/economy. There's more content coming for Economy and Finance 101. I promise probably over the next month or two, they will start putting some more content together and you'll have much more to look at during the year. And don't forget to follow us on Twitter and on LinkedIn. So have a good week, and I'll be back in 2 weeks following spring break. So thank you. Have a good week.